Hey everybody, Jim Malone here, coming to you live on Dallas trading floor. Well, it looks as if the market is in correction. Not a great thing, not a great thing to say, but the market is correction, so we need to be reducing our positions right now. That's what definitely I've been doing today. Basically, what's going on here is that we've got a pullback and it does look like it's the stock market is shrinking, and it's time to. If you have any profits, it's probably a good idea to start taking profits right now and then reduce your position. Here's the thing: the stock market basically slides. It's the the 10-year yield on the bond. The 10 is 4.3%. It's basically up, and this is definitely telling because the market is being swept out of the stock market into the federal debt market. So definitely pulling money out of the economy, and that is making a big difference. Interestingly enough, and this is probably not a great sign either, we have the highest now. We have the highest mortgage rates since in quite a while. The mortgage rates have gone up to 7.9%, and that's the highest in 20 years. So housing is very much under pressure. We're going to probably see, with elevated rates like this, we're probably going to see valuations eventually move lower, just because you just can't afford as much. You just can't afford it. You can't afford as much with housing right now with the high interest rates. So definitely something that you've got to keep in mind, and it's going to affect the overall market. Interestingly enough, we've seen a lot of strength in the home builders, which is very interesting. I think it's mainly because a lot of these home builders have their own money and they're buying down a lot of the mortgages. So basically, kind of a tough environment to be in right now. Definitely want to reduce your positions. Here's kind of what I'm doing. The market, of course, is in a correction. What this means, this is a technical term. That means that the indexes are off over 10%, and we could definitely see this in the Nasdaq. But one thing I want to warn everybody about is it's probably a good time to start lightening up on your positions. You want to be no more, I think, than 40% invested in the market, the rest in cash, and you want to be taking your winners. I cut my position in Ollie, OLLI. Even though I had been doing good, I did have profit in it. I cut half of my position, and I've been moving into primarily oil and gas areas in the market. But I want to show you this chart for the Nasdaq. As you can see, we've moved definitely lower than that 50-day moving average. We're down. Basically, this is the third day in the row that we're down. We should have had some support right here at about 13,756. That was the 50-day line. We didn't get it there. We violated that, so that is what created the market in correction. Basically, going from the top here at about 14,393 all the way down to currently where it's at 13,269. So this is the Nasdaq, and of course, this is where most of the growth stocks are. We've had just basically sell-offs across the board. It's probably not a good time to be starting a position in any tech issues, so that's really something that we've got to be very concerned with. Here's the market exposure. Basically, what you want to do is, the small caps were hit hard. There's been one called distribution days. That's when many of the funds are selling out of a lot of their positions. We do have some leaders, though, in the retail area. TJX doing well, and FEMSA. FEMSA is the Mexican bottler of Coca-Cola. They seem to be doing well as well. But in general, not a good situation. Now, next week, we're going to be coming up on the earnings for NVIDIA, and that really is going to be critical. If they don't make their number, we're probably going to go lower on the market. So just kind of wanted to show you that. I want to take a look at Tesla currently. And I want to show you that this is not a time to buy Tesla right now. We're going to get an opportunity, I think, but right now I think you got to be super careful when you're picking stocks. And one of the areas is Tesla. Again, I love this stock. I've made a lot of money on it, but I actually sold right before earnings. That was about here as it came up. I sold for about 60% of my portfolio, and then when it came down here and bounce. That's where I sold the rest of it. So I'm out of Tesla right now. I'm waiting for an opportunity possibly to get back in. But where I think Tesla is going to light is right about here. I think we're going to get some support at about 207, 208. That's kind of what I'm looking at. So currently we're at 219.22. We were off about 2.8% today. A lot of people are selling out of Tesla right now. Of course, they have issues regarding their prices of their cars in China, and they're having to compete vigorously against BYD and some of the other Chinese manufacturers. So definitely, definitely a tough market. Also, want to show you the stock of the day. This is the IBD stock of the day, and this kind of is telling us where we should be looking if we want to put some money to work in this market, where we should be looking, where the money is flowing. And this is a stock called VAL, VAL. It's in the oil and gas services area. Now, I own currently Schlumberger, which is also in the same area, and another one as well. But let's kind of analyze the stock of let's analyze VAL a little bit here. And if we look at VAL, we definitely are seeing, it was up today, but again, we sort of have this handle going on here, cup with handle. It was the stock of the day today. It does have a pretty good relative strength, 91. And if you'll notice, the 50-day here line, this is the red line, is moved above that 200-day line. That's what they call the golden cross. Obviously no guarantees here, but it does look like there is a rotation into some of these oil service stocks. Let me kind of show you what I have currently, what I'm owning in my stocks. I definitely have I trimmed a little bit on Ollie's Bargain Outlet today. It was down. I still have some Ollie's Bargain Outlet, but I've set my stop loss pretty tight on that one, and at about 70.50 is where I have my stop loss on all the rest of my Ollie's Bargain Outlet. Helix, this is also in the energy services area. This one was down 1 cent, so I definitely think there's a movement into some of these oil and gas stocks. That's sort of where the strength is. I've been buying Marathon Petroleum. That was up today. They're, of course, a refiner, and one of the things that we're going to see is with the increase in the price of fuel, especially diesel fuel, Marathon is poised to do very, very well. They're one of the biggest refiners of diesel in the United States. And even though we have electric trucks, diesel is what moves the world. So we are going to see the inflation that's coming in. There's going to be a lot more inflation, unfortunately. Everything pretty much is moved by truck, and therefore what goes into those trucks, that's diesel fuel, is going to become more tight. Our supplies on diesel are going to become more tight, I believe, and that is why I've been accumulating a position in Marathon Petroleum. I also bought a small position in Novo Nordisk. This is a kind of a defensive play because basically Novo Nordisk is in the area of insulin. They are one of the largest producers of insulin in the world. They're based in Europe, so they trade a little bit strange, mostly trade off after hours because they're trading on the Amsterdam exchange, and it is a Danish company. So that's something that you got to look at as well. But NVO, I think it's coming out of a very nice pattern. Let's take a look at it just really quickly, NVO, to see if there's any opportunity to get in. Again, mostly right now, the best thing to do is to go to mostly cash, but we do have a situation where on earnings, they gapped up as you can see, then pulled back. It got support at the 180, and then they're starting to move higher. So I do expect this one, possibly. I mean, it's not going to be a tremendous one, but it is improving in strength, 96 relative strength. So that's one of the ones that I think that we can really look at potentially for some relief in this market, some place to put capital if you need to do that. I also have Schlumberger, that's up today. That's in the oil field services as well. SLB. This is a bigger company than Val, but it does seem like there's a lot of institutional interest in the oil companies, because obviously in a downturn with high inflation, they're going to make profits, and everyone else probably not. The banks are also very, very weak. If you'll notice, one of the great things about many of the oil companies, they don't require as much banking as other companies, because they actually produce capital, because when they sell that oil, that's in dollars, and they don't really have to go borrow as much as some of the other companies. So this is where I think we're going to see a shift from some of the tech into, again, some of the oils. It's more of a defensive play. This is SLB Schlumberger. Let's kind of look at the intraday chart on it. It was down today, but I definitely think we're going to get a bounce here if we get a correction in the market, because this stock is very likely to move higher. As you can see, this is the weekly chart, and it's been on an upward trend here for a while. On the weekly chart, we do have this golden cross 50-day moving above that 200-day. So that's looking fairly good. All right. Well, thank you very much for listening to my jabber jibber, and we'll get to your questions right away. Thank you so much. All right. Okay. This is a great question here. I'm kind of taking a little bit out of order here, but Bombadoc is looking at XLE. Now, the XLE is a energy select spider, and it covers the energy area. Now, there are three major components in the XLE. One is Exxon, the other one is Chevron, the other one is SLB Schlumberger, which is the oil field services company. So this is the XLE, and the question is, I think from Bombadoc, is this viable? Well, I definitely think that as a defensive play, this was a good one, and the reason is because you can see that 50-day line almost moving above that 200-day. We're starting to see potentially a breakout here in the XLE. Now, the higher high on the XLE is 93. Currently, it's selling for 87.94. Now, it was down a little bit today, but I do expect it to probably move higher in tomorrow. Now, if you notice, the relative strength line is 77, and that line is moving upwards. Why is that significant? Well, the reason that's significant is because this stock, well, it's not a stock, it's the ETF, is gaining against the rest of the market. Now, where is there entry point that we can look at for the XLE? I think that it's definitely viable. At this point, we gapped up today, and then we pulled back. So I definitely think that we could probably buy this right now. I think there's a lot of strength in this in the XLE right now. I think there's going to be a move to the to some of the oil patch. So this is probably a good one. There was a little bit of selling towards the end of the day, but I think if you could pick it up for 88, that would be a good way. I probably wouldn't try to buy it below 88, but if we can get another move on this tomorrow above 88, I think this might be really a good entry point here. We've come up, we have this cup, and then we've pulled back. We're pulling back sort of in a handle, but we got a bounce today, and I think that it's likely to move higher. 88 to 90 might be a good place to enter the stock, but I definitely like it, and I think you're definitely thinking along the right. I think you're definitely thinking along the right way there, Bombadoc. So appreciate that. Appreciate that comment. Really do. Thoughts on the oil sector, both majors and services? Well, I'm more invested right now in the services. The area I'm a little bit more defensive, and that's a really, really good question, Charles. I'm a little bit more defensive right now. I'm mostly buying the ones I think that they're going to print money, and one of the ones I think is going to print money is not a driller and not a services company, but it's a refiner. Typically, these are not as well performing, but in a tough market, I think that the refiners can be a good place to go. Let me look at MPC. This is one I do have, and I do like this a lot. MPC, at least I like the chart. So I'm going to take a look at that chart in just a second. Here we go. So here's the chart of MPC, and this is this is Marathon Petroleum, not Marathon Petroleum. There's two marathons. There's Marathon Petroleum, and then there's Marathon Petroleum, which is the one I'm talking about, and then there's MRO, is Marathon Oil. They're basically the same. They're two companies, but they're similar. Marathon Oil runs the gas stations, and that's a good stock, but I don't think it's as good as the refiner. The one I'm mostly interested in is the refiner. It's the more expensive of the two at 142. It was up today. You'll notice how it came down, and it's been in this upward trend. It's a 93 relative strength. We just had the golden cross on it, which is strong, showing a lot of strength, and we came all the way up to 150. We have a little bit of resistance at 150. I've been buying it when it pulled back. I've been buying it up here, and I definitely think this one potentially is going to be pretty good. So in the oil sector, there's several stocks that I like. One of them is SLB, which is Schlumberger. This is sort of the big kahuna of the oil field services companies. I like this one. It has essentially not really a gap up, but a very, very strong move. Also, the golden cross on it, 93 relative strength. So I'm liking the strength. SLB, this is going to be a place I think that many of the companies are going to go to hide. They're going to come out and attack, and they're going to come into some of these stocks. So definitely like this. Now, in terms of the majors, I'm not as bullish on the majors, but let's look at ExxonMobil, XOM. Of course, it's the symbol for ExxonMobil. Here's why I'm not as bullish on the. This is one of the reasons I'm not as bullish on the majors, and that is, if you'll notice, it's sort of having struggle. It's moving above that 200-day moving average, but you'll notice we had the death cross on it, or the 50-day move below. The relative strength is only 64, not a good look. So in terms of the actual oil patch, I'm not as interested potentially right now in the. I'm not as interested in the actual oil companies. What I'm interested in is the services companies and the refiners. That's where I'm really going to concentrate my look into the market. Let's look at Chevron CVX. This is old Chevron Texaco. Again, it's similar issues with the 200-day moving average. It's below the 200-day moving average, only a 47 relative strength. This is the reason why I prefer the refiners like MPC, which is leading the refiners. This is a much better stock right now. 93 relative strength, golden cross, and it's moving in an upward direction. Also, if you look at the weekly chart, you'll notice that it came down to the 200-day moving average. It got support, and now it's going to go higher. So this is the one I like in the oil field services area. That's kind of what I'm looking at in terms of that. So thank you very much. Thank you very much for that. All right, let's go over here to. Hey, Charles, thank you. CEG. Let's look at CEG. Take a look there. Interesting company. I don't know. Constellation Energy. Yeah, this is an interesting company. This, I believe, is in Baltimore, if I'm not mistaken. This is also a refiner. Good chart. Boy, you picked some good charts there, Charles. I like this chart. Definitely like this chart. And it is also very strong. Now we're looking at the weekly chart. Let's go over to the daily to see. Looking this very nice. We have the golden cross on it right there. That's very, very good. That's a strong that's a strong indicator. We had the golden cross basically back here in July, about July 4th. The 50-day moved above that 200-day. We had this gap up, and we also have a 93 relative strength. So this is a very good stock. It's pulled back a little bit. It probably should get some support right about 100, 103. That's kind of where I'm looking at it, but looking good. I want to take a look to see some other factors here. Let's see if I can find out a little bit more of that. Yeah, it's number one in its group. That definitely is something that we want to see. Let's see if we can rank that. a little bit. Let's see if I can rank that group. Yeah, 75 relative strength. So I'm not as excited about it, but still very, very good on that on the strength. Um, these are basically in the alternative energy area, but good, looking very, very good here. But again, I think that probably my own particular look see at this would be for would be for something that is not as is probably a little bit more um, a little bit more a little bit stronger in the market. That's one of the reasons why I like that's one of the reasons why I'm interested in MPC as opposed to Constellation. It's not bad, but I think we can find stronger. I think we can find stronger stocks. Um, let's look at one of them that I always like to look at in. Let's see, go over here, and that is. Let's see if we can take a look at MPC. Let's look at the chart for. Oops. All right. See if I can get this one up. This is for we did marathon. Let's do Valero uh, LO. I believe VLO is Valero. We're gonna look at Valero. I like Valero. It's based in San Antonio. It's a major refiner, but I also think it's very strong. They have a really big refining component as well as some of the other ones. I think this is starting to set up. Wouldn't be buying it here, but this one is starting to set up as well. This is Valero, and its higher high is about 145, and it's moved above that 200-day line. We can see that the 50-day line is starting to move up. It's a little bit stronger than Constellation, the one that you had at. It has 81 relative strength. I definitely like this. Definitely like this one. Let's see how it's trading on the daily chart. Looking at the weekly charts first to kind of get a look see. This is coming out. This is created a nice base. By the way, this is called bases. Where you have these kind of cup things. It'll come up to a high. It'll pull back. This is a cup with handle. So this one might also be on your watch list. VLO, Valero Energy. So that's a good one as well. That's a good one as well. All right, Melly. Let's look at Melly. Melly took a dive. Melly, of course, is Mercado Libre, based in Argentina, and it's a very high price stock. It's been a winner for a long time, but unfortunately, this last earnings, it ran into a little bit of a headwind here, and it's not been moving as well. $1,196 a share. But what happened is we came out of this cup, very nice cup, the handle, but it didn't succeed, and we pulled back, and now we're below the 50-day moving average. So here's the thing: I would set my stop loss at right below 1,200 if you're in this stock, because I think this could pull back more. We've kind of got to wait. I think what's going to happen is that we're not going to be able to buy this until it hits until it really hits a 200-day moving average. Let's take a look at a stock that I'm in currently, and that is Ollie, OLLI. This is Ollie's Bargain Outlet. Now, it was down today a little bit, but I think you'll like this chart a little bit better than the one from Melly, just because I think it is a little bit stronger. 99 relative strength, and it's coming out with a double bottom and then a kind of a cup. And hopefully we're going to see some strength there. Let's look at the weekly chart on it. Yeah, see, there you go. We're still at the higher high. We've got this handle here. And so this one I still am in. I've set my stop loss basically at the 50-day line. I did take profits on this one today. And but I still think that one of the other areas of the market that's seeing strength besides the oil patch is some of these retailers, but not all the retailers, just some of them. So it's been a very pickers stock pickers market, really. MNSO. Thank you, Deep. This is This is the Chinese retailer that's very big that's all starting to come to the U.S. Very big in China. Now, the problem with China, of course, is that they are having a not really, I wouldn't say a meltdown or anything, but it's getting more difficult for the Chinese market. The Chinese market has not been performing well as of late. So it's one of those things where it's a tough market. So let's go over to the daily chart on this one and take a look. And it is still is staying nicely, above that 50-day moving average. Relative strength 99. I definitely like this. This is the number one, I believe, in the group, but it's getting support right at 20. Now, I probably, if I was more confident in this market going forward, I would probably start a position here because of this handle. But I'm probably not going to do that. I'm only going to probably have one of the retailers, because I do believe that it's going to get some support at 20, but this one, it's through earnings, which is good. Um, but as you can see, it's sort of in this trend. It's kind of been hanging out really for quite a while. Let's see if we can go to the weekly chart here. Yeah. So on the weekly chart for MNSO, we kind of have this. We kind of have about 20. That's sort of where we have the resistance. It moved above the resistance, and so it may be making a higher high. I'm not as bullish on this, but I do like the fact that we have this relative strength line moving up. So, if I was in this one, I wouldn't get out of it, but I don't think I'd add at this point. So that's kind of my take on that. All right, let's look at DCBO. Let's look at DCBO. I don't know DCBO. Yeah, there we go. This is up after hours. Ah, yeah, interesting stock. Don't know much about this one at all. I don't even know what sector it's in. Let's see if I can find out, get more information on it. All right. See if I can. Trying to get some. Oh, okay, so this is in the Computer Software Enterprise Group. I don't think I'd be wanting to buy in this particular area right now, just because it's of the market pulling back like this. So I think I'd be a little bit careful. Let's take a look at this one. Let's kind of look at the ratings on this one. Obviously, ServiceNow is at the top. This is the best one, but 98 composite rating is really really good. I don't know what this does. So I know JFrog, I know Workday, I know ServiceNow, but I would just be a little bit careful in this market buying in this area, because I definitely think we're seeing profit taking going on, and I do think that we may be in a situation where this may not perform as well, and it's pretty strong. It's bounced off the 200-day line, but I think it's kind of going to be a little bit difficult. I probably need to do more research on this stock, really, to give an honest opinion on it. But right now, this is kind of the way it's looking, and it's come down. It's tested twice the 200-day moving average. Just tested it, and it's moved right up to about 40. Seems like it has some resistance at 40. This might be viable if it can move and close above 40. So, we're almost there. I mean, it's at 40.66. So up 12% a day. I don't quite know why that was the case. Looking at the weekly chart, let's look at the daily. Yeah, same kind of thing here. Interesting. Yeah. So if it can close above that 40, if it can hold above 40, then I think it might be good. All right. Let's look at the Spider and the QQQ, and these, of course, are the ETFs that cover the major indexes. The Spider SPY is the original ETF, and it is basically weighted to the what is in the S&P 500. So SPY, these are going to be off obviously because of the fact that the market has been pulling lower. So let's look at the spider here and jump on over to the spider. There we go. So maybe we can see it a little bit better here. 77 relative strength. Here's the issue. This is why we went from a uptrend under pressure to a market correction, because it's more than 10% from the 460 all the way down here to the 442. Now, if you're following the ETF strategy, and this is a great strategy, by the way, if you don't have time to totally pick stocks, but if you don't have time to totally pick stocks, one of the things you can do is employ this ETF strategy. And what that is a strategy that basically, when the market is in an upward trend, you're 100% in the market. When it's in a uptrend under pressure, you're 50% in the market, 50% in cash. That shows right here. So let's see if I could kind of show you that one as well. Yeah, here we go. So this is the ETF strategy for this is the ETF strategy. Currently, we're in a market in correction. We moved to the market in correction today at the close of the market. That the market changed from uptrend under pressure to market in correction today. So basically, we don't want to be more than about 20 to 40% exposed to the market. But if we're following the ETF strategy, we want to be entirely out of these indexes. We want to wait until the market moves into a uptrend, confirmed uptrend, before coming back in the market. So right now, if you do have, it definitely looks like, at least with the spider and the other indexes, that we're going lower. So probably a good time either to sell or hedge, but I would be moving to cash at this point, because we may go lower. Now, who knows? I mean, who knows where the market will go? This is definitely true if you're in the QQQ. This is an ETF that covers the NASDAQ 100, mostly technology stocks, and this one as well. The NASDAQ 100 as well is having issues regarding this. You'll notice it's below that 50-day moving average. This is on the daily chart. Let's look at the intraday chart. As you can see, it's just not a good chart at all. We've been losing strength, and if we look at a weekly chart, you can see that we kind of came up to our high, and that was basically at about 386. And then, we've been losing strength since then. So this is going to be probably move lower. I suspect we're going to see the Qs come down to about 330 or so. That's where I'm looking at. Why? Because there is some support right there. So I definitely think that right now, if you're in the index funds like this, if you're in the QQQ, the SPDR, or the DIA, you might want to kind of possibly be lighting up a little bit. Good question. This is also from Lisa about Google holding. I definitely think Google, I had Google, I sold it into earnings, and I'm looking possibly to go back in it. The reason I think Google is holding is because I think that they are, they have basically, I think most of the damage has been done to Google, and I think that we shall see what kind of what happens. But this is the chart for Google. This is the weekly chart here. So this is the kind of looking at it the furthest way. It came up. We definitely have a golden cross on it, which is good. So basically, starting at the end of March, that's really when it started. I had it in from I had it at here, and then gapped up, and then I took profits basically when it pulled back here. I've kind of been waiting. I've been waiting to get back in. If it pulls back to the 50-day line, I'm probably a buyer on this one. This is the one tech that I like the chart of, and I definitely think it's good. This is the daily chart we're looking at here. You'll notice that it seems like there's some resistance right about 130. So if we can move, this might be a good place to get in. It's got a relative strength of 90, and you'll notice that the relative strength line is moving higher. So it's getting stronger against the regular market. But I wouldn't be in a hurry to jump into this one just because of the condition of the market. It just, it's a tough market to trade right now. And, even with that, you can see it's very, very volatile. So one of the things that you can do possibly with Google, it seems like it hits its low twice a day, kind of right after what they call the amateur hour. So don't buy it in the first hour, and then right before close, if it's going to pick up, that's where it's going to pick up. Typically right at about right about there. So we have, this is kind of how it's been trading. You'll notice kind of it'll come down in that first hour or so, and then it finds its bottom, and then that's where it trades up. But I probably wouldn't be going big on Google right now. Maybe a pilot position or something, but that's probably about it. All right, let's look at Tesla, and then take some questions from TikTok, and that'll probably be it. TSLA, and just not a great chart at all. This is the intraday chart. Let me show you for Tesla. Yeah, just not a good chart at all. Tesla is, I believe, going to move down. I think we're going to get some support right about here, about 207, 208. That's where I'm looking to possibly, if we get some support there, then I might be I might be a buyer. But right now, as you can see, it is kind of getting hammered. So don't right now is not a good time to be in Tesla. It's just not really great. All right, are they talking about dividend monsters? This is another great question, Charles. ET, of course, that's Energy Transfer. I definitely like these kind of companies, at least in this market. Why? Because, well, these companies print money because they have pipelines. Energy Transfer is based here in Dallas. I actually, for a part of it, the Sunoco, which was purchased by them. But the thing about Energy Transfer that I really like, of course, is that they have a very solid dividends. There's a pipeline company, not very exciting company. It really isn't very exciting, but does well. Bounced off the 200-day moving average, 71 relative strength, kind of a little bit spiky. Let's look at the weekly chart, kind of in general, just kind of been just moving right along that 200-day line. Relative strength 71, and it's starting to trend up. I think this is a slow mover. It's a low risk relative stock, but I definitely think you could definitely hold it for the long term. All right, thanks everybody. All right, let's see if we have any questions from TikTok. I'm going to kind of look to see if we have any questions. All right. Meta. Okay. Oh, can you review NVIDIA? Yeah, very good question. Thank you so much. Let's take a look for this is a question from TikTok. Unfortunately, I can't display everything from TikTok, but let's look at NVIDIA. This is of course reporting next week, and so this is significant. I would be lightening up on NVIDIA here. I think it's potentially, as you can see, it's come way up. It almost was at 500, and now it's pulled back a little bit. I'd be really careful on this one, even though it does have a really good relative strength at 99, and it's moving right up that 50-day line. I think this one is likely to pull lower. As you can see, this daily chart. It is getting some support at the 50-day moving average, but I'd be really careful about this one. Coming into earnings, if I wasn't up at least 10% of this one, I would be a seller. And I just think that it's likely, it's likely to go lower. And this is NVIDIA. I had NVIDIA. I took profits on it. This is next week. This is the best performing chip stock. This is the sort of the leader in tech land. But I'm a little bit nervous. I don't think it's going to necessarily fall off the earth, but I don't know if it can hold the 50-day line. So I'd be very, very careful. I'd be very, very careful about NVIDIA. Now, here's the thing. We're coming up on earnings in NVIDIA, and, we definitely have to look at, how they're going to trade. So if we look at Nvidia, even though it is probably the biggest, it's the big kahuna, it's not the top. It's not the top dog in the semiconductor space. That goes to Lattice Semiconductor. I don't own Lattice, but I've owned it in the past. Here's the thing about in Nvidia, we have we have um, we have earnings coming up pretty soon. The estimate revisions are downward, so I just think you got to be careful with Nvidia. I would be taking profits if I had them in Nvidia. I did take profits in Nvidia that I did have. I bought it off I bought it off the 50-day line, let it bounce, and then I took profits. But I don't think it's right now. I think you got to be really careful. I don't think it's a long-term trade right now. I think it's a swing trade. Whereas I think some of the other ones are a little bit better than Nvidia right now. So really, what I see in this market is, where I see in this market right now is I think people are moving for safety. People are moving into some of the oil stocks, but not necessarily the drillers like the big majors like ExxonMobil and the others, but they're moving in. They're moving into the oil stocks now. One of the stocks I do think that I've been looking at that I don't currently own is PSX Phillips 66. This is also a refiner and driller as well. So it's a smaller one based in. I think they're still based in Tulsa, and it kind of gives you. Let's give kind of a look. See, there's several of these refiners that I like right now, and it's 76, so it's not the top dog in terms of the refining stocks. Marathon Petroleum is IPC, and I own this one. Also, Par Pacific, I don't own this one, but I also like HF Sinclair. This is based here in Dallas, and this one has been pretty strong. They own a number of refineries, and again, they're very big in creating diesel. But Phillips 66, I like this stock in general. So we go to the chart for Phillips. This is another one. I don't own it, but I'm looking possibly to get a position in Phillips. So there we go. Okay, it's up today. Yeah, and it's coming out of this weird, yeah, again, golden cross on it, 88 relative strength, starting to make a move above 115. Let's look at the weekly on it. There we go. Yeah, and it's starting to make its move. As you can see, the 50-day is starting to move up with the relative strength line moving up to 88. And that's looking good. Pretty good buying activity. If you notice, mostly blue bars there on these weeks. So I do like this one. After the close, it's down a little bit. So the question is, can we buy it? Where can we buy it? I'm not in it because again, I'm not in it right now, but I think that it might be buyable right here at about 113. That's kind of where I'm looking, possibly to see something. But it's on my watch list. I don't own it, and but it's definitely one I think that you can take a look at. This is where I think support is about 113 right there. All right, thank you so much, everybody, for looking at my little show. If you're not, oh wait a minute, we have one more comment. Let's see, down here. Nvidia spread, yeah. Well, that's interesting. Put spread. That's not a bad idea on a put spread. I kind of like that idea. I'd like to look into that more, Charles. I agree with you. That one could be good. Oh, okay. This is interesting. Also, Charles is talking about Amazon if it bounces off that 200-day. Let's look at Amazon. AMZN. Amazon has been, it's, I don't know. I don't know about Amazon. It looks as if this is the daily chart. Let's look at the weekly. Kind of get a, yeah. Okay, so with Amazon, it's sticking to the 50-day line. That's good. It's 99 relative strength. I really like that. On the intraday chart, though, it's down. And everything is down today, so that's not a big deal. But it definitely looks like if it pulls back to that 50-day, that might be in place. But I think that Google is stronger if you want to be sort of in tech. The problem I see with Amazon is a little bit of fatigue when it comes to people buying online. So no real information there. But I think Google is stronger As you can see, it's trading above that 50-day moving average. I think it's a little bit stronger. I don't own either of these, but I definitely think that that's if you're going to look for tech, that's kind of a place that you can do. All right, thank you so much, everybody. If you could, as a favor to me, I'd really appreciate this. If you could jump in here and smash the like button. That really helps us. So smack that like button, and also if you could, also subscribe to us on YouTube. We're at youtube.com/Dallas Trading Floor. So that's where. So if you could go over there and subscribe, that would be fantastic. I need more subscribers. Everybody tells you that, but I definitely need more subscribers. So smash that like button and subscribe to the YouTube channel at youtube.com/Dallas Trading Floor. I'm going to try to hopefully be back tomorrow. Let's see if we got anything else. Yeah, I was off for a little bit. I've been doing some stuff, and hopefully I'll be more diligent now it's going on. So, but the most important thing right now, and I just want to point this out to everybody, is it's time to be very, very careful in the market. We went into this correction. The market is in correction, so we really don't want to be that exposed to the market. We want to mostly be in cash right now. That's kind of the place to be. We've had 9 distribution days on the Nasdaq, and it's been difficult. So it's time to reduce exposure. We probably want to be no more than about 25% invested in the market right now. I mean, that's just kind of the end all be all. We kind of want to be very, very careful. We want to remove our exposure down. It says between 20 and 40%, but I think that it's better 30% below right now. As we have moved in this correction. Now, we will probably get another opportunity. Now's the time to be putting together that watch list. I definitely think there's movement into some of the oil field services and stocks, not in the oil stocks necessarily, but oil field services, and I also believe refining and transportation, like pipelines, also a very good place to be. Very defensive, and that's kind of the way it is. All right, I will hopefully be back tomorrow. If the creek don't rise and everything else. Thanks for talking. Thanks for giving me your questions. Also, please, if you can, tell other people about the show if you're interested in trading. And hopefully we're going to have some stuff coming up here shortly. So I'll be back tomorrow, and happy trading.